This is a compilation of market-close reports and analysis from Reuters, AP, and financial news outlets May 6, 2025. Thank you for reading our news. Please like and follow us for daily news updates. Major index movements. On Tuesday, May 6, 2025, U.S. markets fell broadly. The Dow Jones Industrial Average lost about 0.9% to close at 40,829. The S&P 500 fell 0.8% to 5,606.91. And the Nasdaq Composite dropped 0.9% to 17,689.66. The sell-off snapped the S&P 500's 9-day winning streak. Small-cap stocks underperformed. The Russell 2000 slid 1.1% to 1,183.19 sector performance. Most sectors were lower. Technology and consumer discretionary led losses. Mega-cap tech firms from Tesla and Meta to Apple and Amazon all ticked down. By contrast, energy and utility stocks were the only S&P sectors in positive territory. Oil rebounded about 3% after Monday's lows, lifting energy shares. In short, tech and trade-sensitive stocks lagged while energy, utilities outperformed. Corporate news earnings were mixed. AI software maker Palantir plunged roughly 12% even after meeting Q1 estimates, tempering the recent AI-driven rally. Ford Motor Company bucked the trend, rising 3% after Q1 results beat expectations. Other mega-cap techs with recent reports, Microsoft, Nvidia, etc., were slightly lower after earnings, as investors took profits. Economic indicators, key data, were modest. The April ISM Services Index unexpectedly jumped to 51.6, indicating continued expansion in the services sector. Treasury yields eased slightly, and the dollar weakened, reflecting some relief in funding pressures. No major surprise CPI or jobs figures arrived that day, so markets focused on broader trends in inflation and growth. Policy influences, trade policy, and the Fed dominated headlines. Investors awaited the Fed's May 6 to 7 meeting, which was widely expected to hold rates steady. All eyes were on Chair Powell's Wednesday remarks. Meanwhile, tariffs remained a cloud over sentiment. President Trump's announcement of a proposed 100% tariff on imported movies and broader U.S.-China tariff negotiations kept traders cautious. In short, uncertainty over trade and Fed guidance was a key drag on markets. Outlook in the near term, analysts expect continued volatility. Sentiment remains cautious amid trade and policy uncertainty. As one Reuters commentator noted, markets were shrouded in a thick fog of uncertainty around trade, growth, and Fed policy. Going forward, any clear signal from the Fed, or news, of eased tariffs, could spark a relief rally, but until then upside catalysts are limited. With earnings season just beginning and U.S.-China talks pending, investors are bracing for choppy trading ahead. Thank you.